Well, this has been a really important year for us. We've obviously delivered an excellent result. Record financial performance, market share results across the board are really impressive. And we've also been investing significantly behind our brand, building organizational capability and capacity to really ensure we're building against our potential in China and the US in particular. They're the two biggest consumer economies in the world, very different consumers, and we've invested quite a lot of time and effort to make sure we're really clear about what matters to them, where they like to shop, how they like to shop, and what we need to do to make sure we're there and ready for them.
Let's go to China first. How are you drilling into China? You've made quite an important hire, I think, on the marketing and distribution side.
We're building a great team in China. We've hired our CEO for the China business this year, an excellent executive whose name is Li Xiao. He has started to already build depth in his team, and we've got a very clear plan, and he is a guy with great experience in building businesses in China, got a great entrepreneurial background as well as having worked for some very big companies. So he's already off to the races, and we're really excited about it.
So China's obviously very interested in clean and green. How do you then sell this sort of A2 message of wellness and in particular to young children as well as to mothers?
Well, look, we're a company with a very uniquely high quality product that sits in a special place in consumers' hearts. So great product, strong brand, and a culture that is really oriented around finding new ways of engaging consumers and delivering outcomes for them. And so we're going to market in a way that's quite different to many traditional players, and that's making a big difference.
Okay, you're obviously very much involved with JD.com on the e-commerce side. What about these latest developments in the last few months around labeling, use of Chinese labels, and other regulations in China, Jane?
We welcome the new regulations that came in this year because they were really oriented around protecting consumers, and that's a good thing. And we're working hard to ensure that our combination of channels into market are the right mix for consumers and that we're fast on our feet to continue to evolve that. And I think because we're so focused on consumers, we really see what's important to them, and we're adjusting what we do to make sure we're in the right places at the right time.
Yeah, we've got this jolly old trade war between the US and China going on. Does that impact you at all?
We're very focused on the things that we can make a difference with, and that really comes down to the consumer. We would prefer if trade battles went to the side and both the US and China focused on getting back to business as usual, but we can't control that, so we stay focused on the things that we can, and that's making a difference.
But if things go really bad between China and the US, I mean, is there actually upside for you?
Well, we're just focused on the things that we can control, and that comes down to making sure we're doing a great job for consumers, and that's proving to be a successful formula.
Over in the US, you're still not obviously cash flow positive over there, so you're going into that market very aggressively. When do you think you will be cash flow positive? What are the challenges there?
Well, the opportunity for us in the U.S. is significant, and it's a huge market. So the most important thing for our shareholders is that we drive growth and as quickly as we can. We're building our brand. We invested significantly in the second half of the year to ensure that we were taking advantage of the very strong distribution that we now have. We spent quite a lot of time in the second half of the year being clear about what it will take to be great in the U.S., and we're on a path to get there. So we're very excited about our potential in the U.S. We introduced a new product this year. There's quite significant untapped potential yet to come.
Obviously, your main driver of earnings is still very much the Australia and New Zealand market. How has the change in terms of the rise of the dollar a litre on the supermarket shelf, how has that impacted you?
It really hasn't, and we're just very focused on making sure that we're doing the right job by consumers. We're recognized now for really making a fundamental difference in people's lives with respect to the nature of our product and the impact it has on people's health and wellness. And we have to do what we need to do to ensure that we're paying our farmers a premium and the rest of the supply chain's healthy to supply the product in the right way.
Yeah. So that supply chain, I mean, if you are growing and you're incredibly ambitious in these very, very big markets, you think of the potential size of the Chinese market as well as the US market, have you got your supply side sorted that you can actually move in terms of your relationship with Fonterra and other dairy farmers?
We have a really strong and supportive farming community that is keen to see us be very successful. When we win, everybody wins in our supply chain, and we work closely together to build our business for the long term with very ambitious plans. And that includes our processing suppliers and manufacturing partners, Stinley and Fonterra. We're working together to ensure that we can deliver on the opportunity ahead.
Yeah, so Sinlay, for example, could actually, because I think you've got a stake in Sinlay as well, that manufacturing outfit could actually crank up as and when need be.
Yes, and all of our planning, as you can imagine, is oriented around the world of possibilities.
Right. I notice you've got some interesting shareholders coming on the register. You've obviously had BlackRock there. You've now got UBS, which is sort of jumping around that 5% mark as a substantial shareholder, and also a major Japanese investor.
We do, and increasingly our register is multinational. We have a strong and growing investor base that's based in the US and in Asia, and we expect to see that to continue. So we're excited about the combination of investors, and the interest is significant around the world.
Interestingly, you've got now quite a substantial, as I say, Japanese investor, but you're not in the Japanese market. Would you look at the Japanese market?
Well, of course we would. It's a very big market and an important part of Asia. But we've been quite clear in this result that our biggest priorities are China and the US. We see broader opportunities in the region, which includes Japan, but we will take our time to get to those because of the need to really build scale and capacity in our organization to tackle the mix of opportunities in front of us.
Yeah, Jane, you're pulling out of Britain, which I think is really, really interesting. You didn't have a big presence there, but that's not so much to do with Brexit.
It's not to do with Brexit. I mean, there are complexities in the marketplace, but the issue for us in the UK is it's a nice business, it's a growing business, but it's not going to be a scale opportunity for our investors, and therefore our focus needs to be on our big opportunities.
Right. Now, from an investor point of view, clearly this is a growth stock, but you have yet to pay any dividends. What's your thinking? What's the board's thinking there?
Well, we are a growth company, and the opportunities ahead of us are very significant. The balance sheet is strong, and our cash position is growing, and we're clear about the things that we need to do as an organization to deliver on our ambition, and we need to leverage that strong and growing balance sheet. No dividends anytime soon. This is a growth investment by our shareholders, and they expect us to be driving growth as fast as we can.
Right. So we've talked about the potential. Obviously, your gross margin remains very strong. I think it's gone up to 54.7%. Managing costs in this scenario, how is that? How much focus have you got there, Jane, in terms of a big growth scenario? And are there any other risks that investors should be wary of?
No, I mean, we've had healthy gross margins for most of our history as a company. You would imagine that we're very conscious of our cost structure, particularly in the manufacturing supply chain, to ensure that as we continue to grow, we're doing that with a cost structure that's sustainable for the future. But the majority of our emphasis, as is appropriate, is making sure that we're driving revenue growth and building for the long term and investing back in the business and investing back in consumers to build the brand, to ensure that we can take advantage of all that we've built so far. Yep.
And in terms of provenance and safety of product, I mean, are you looking at technology to help you with that, or how do you make sure that that continues to be roll gold?
You would expect us to be doing quite a lot of work to ensure that we understand where technology is going, and we're taking as much advantage as we can of technology to protect the consumer from a traceability standpoint, to ensure that we're making the appropriate investments in R&D and thinking forward many years with respect to where we're headed.
Well, Jane Herdlicker, we've been around the world. Thank you very much. Such an interesting company, and all the best with it.